Hello, everyone. This is Scott Whitehead, Chief Marketing Officer at Total Financial. I wanted to be the first to welcome everyone on our town hall today. We are going to be focusing on the life settlement marketplace and why it really is the perfect time to be in that marketplace. A couple of housekeeping items today. We are going to have all the lines muted today, but if you want to ask a question, and we really do, we would love it if you guys and gals asked questions. You can either use the chat button or the Q&A button, and I will grab a hold of those and make sure that either Diana, Aaron, or Brandon know that there's a question. And at the end, we're going to leave a little bit of extra time for you as well to ask some questions. So we're super excited today to have LifeRock with us. And by the way, one other housekeeping item. On the top of your button, of your browser button, there are probably four little tabs. And if you hover over them, you can change your grid view. There's a grid view, and there's a couple of the different ways that you can see us on the screen. We're going to leave our video on this whole time. So grid view is actually probably the best way because then you can see all of us on that. So with that, we're back on, and I've got Diana Greenberg, who's our president and CEO. I've also got Aaron Garreau, he's the president and CEO of LifeRock, and then Brandon Mars, who is I think you're the chief sales, marketing, and guru over there as well. We're going to spend a lot of time talking about the life settlement marketplace today and where it fits and where it works, and kind of some of the services that we can provide that we think are very different than what the marketplace is. So with that, I'm going to turn it over to Diana Greenberg, and she's going to take the intro and kind of talk a little bit of what we're doing today. With that, Diana.
Good morning, everybody. Thank you for joining us today on our town hall session. We use the word town hall because we would like to think of this as an interactive session as opposed to a webinar where it's mostly people just talking and then maybe you get to ask questions at the end. So we're really hoping that you do participate and do have questions to ask. With that being said, I also want to say to you, look, in this day and age, we are all consumed with webinars and Zoom calls, and everybody is on one on a daily basis. So we really try and pick content that we think is relevant and important to you and will help generate your sales. And we have been doing life settlements for years and years and years and years. And we thought now there's no better time than to discuss why it's important to be in the life settlement market. And we're going to talk about all those reasons. And then we're going to talk about why today we decided to announce our partnership with LifeRock, with Aaron and Brandon. So with that being said, thank you for coming. Let me just give you a little background as to why I think what's going on today is important and why we need to be discussing this. First of all, the market's changed a lot. Buyers have changed, money has changed, our economy has changed. There's just been a lot of change, and it's a really good time because people are moving their assets around. More policies today are qualifying for sales than ever. So for those of you who have been in the market for a very long time, who think you know the market and think you know what's able to be sold and what's not, you might learn a few things today. Third thing is consumer awareness. There's probably not a day that I'm not on TV where I don't see at least 3 commercials, primarily from Coventry, but from many other carriers saying, hey, if you're unsatisfied with your policies, now is the time to sell. So, consumer awareness has just exploded. And there are more and more clients who are now calling their agents and saying, hey, I heard I could sell my policy. Can you talk to me about that and what that is? So if you don't know what it is and you don't know about it, you're going to be left in the dust, and there's going to be another agent right behind you who's going to come in and probably make that sale. The industry has experienced a lot of growth very recently in the last couple of years. We've pretty much gone from 3.8 billion in sales with 2,400 transactions now. And in the next 2 years will be more than double, and they're estimating it to be about a $6.8 billion market with at least 4,600 transactions. So when I tell you transactions are happening right and left, please believe it. I have more than a dozen that have come to me in the last week alone. Life settlement can also help solve a lot of problems. I mentioned before about, the change in our world as we know it today. But people need money. People also need coverage. You play both sides. Sometimes there's going to be a place for both of it. And we think that we have covered that in our market totally. The last thing is, Total Financial has actually been solicited by probably every single life settlement broker / company / anybody to get their business. We've partnered with people in the past. A lot of you know the people we've partnered with. And now we're introducing you to Brandon and Aaron at LifeRock. And the reason we're doing that is because they have a totally different platform than anybody that I've ever done business with. And if any of you know me, you know that I like to do things a little bit differently. And I really like to engage and try new things. And when somebody comes to me and says, hey, I have a proprietary product or platform, and we're only going to be giving it to a qualified number of BGA we think can actually process this business correctly, and they ask me to do that, I'm going to jump right on that. So that's the reason why we decided that we were going to focus and really work and partner with LifeRock. So with all that being said, let me take 2 minutes to introduce these two very important people. Aaron Giroux. Aaron Giroux has been in the business for a very, very long time. He doesn't look it, but he has. He comes from a very similar background as I do. He had been in a family-run brokerage general agency for many, many years. So he has a lot of brokerage experience, knows a lot about life sales, and then left the life business and created his life settlement business. And at that time, he joined and partnered with Brandon. Brandon is Chief Strategic Officer, Scott. And that means, he comes up with all the ideas for marketing and solutions, and he's going to be the one that's going to really be talking to you about how you're going to be able to create opportunities and sales. And his history is really interesting because he comes from a lot of years of life settlement back experience. Some of you may even know him who are on this call. He spent a good stint at Coventry, so he pretty much knows the ins and outs about how they do their business and knows the difference and what LifeRock is going to be able to bring to the table versus what you would typically get if you chose to go direct. So with that being said, I think we should start with our first question, which is probably going to be Life Settlement 101. Brandon, you ready?
I'm ready.
Okay, so Brandon, first of all, welcome.
Thank you.
I think the first thing I want to hit was, please tell everyone the ideal case and what a good life settlement case looks like. What are the things that stand out specifically that you need to make a life settlement case work?
Sure. So again, thanks for having us. Really appreciate the opportunity to be here and to hopefully educate a bunch of folks about new opportunities. So the life settlement market has changed quite a bit, probably since many of you originally heard about it. And I'd say the biggest changes are what now qualifies versus what used to qualify. So when the market started, you probably were educated that it's very unhealthy people that basically need to get rid of their policy quickly. And what's happened over years is that educated financial folks have recognized ways to extend the pool of applicants that can qualify for a life settlement. So today we see people that in some cases are entirely healthy and could qualify for new insurance. We see folks that are not just older. We see people in their 60s, 70s routinely transacting on policies. So it's not just old people, not just sick people anymore. It's really thinking outside the box. I mean, our general market is seniors. 65 and over is probably the right target. We're able to buy every single type of policy. So in addition to UL, which is the most common type of policy due to the flexibility, We're also buying a lot of survivorship policies. We can buy whole life policies. We buy variable policies on a routine basis, and we buy a lot of term policies. Term policies in particular offer a very unique opportunity, especially considering the vast majority, as everybody on this call knows, lapses. 98% of term policies lapse and do not pay a death claim. So if your client is of the right age and they're going to, like most people, let that policy lapse, there may be a market now for it.
So
We
wait,
look at all carriers.
Can I stop you for 1 second? I just want to make sure that everybody hears this because this is a huge opportunity. So anytime you have a client that says they cannot afford their premiums, which today is a lot, you should not be letting that policy lapse, and you have the opportunity to either convert that policy and sell it or possibly even sell the term policy.
Correct.
Okay.
So and we'll get into this a little bit as we go through today's questions and answers, but one of the obvious marketing ideas I will share with you is that if in your book there are any term policies that are set to lapse in the coming months or even next year, those are red flag opportunities we need to look at immediately. So we'll get back to those. But in terms of carriers, we can buy basically any carrier. Some carriers would be on a case-to-case basis. When we look at a case, we look at two factors, Diana. We look at the health of the individual and the economics of the policy. So the economics of the policy are simply determined by the premium outlay. Generally speaking, the lower the premium, the more efficient the policy, the more we're going to like it. On the health side, generally speaking, we want to see some change in health since when the policy was issued. Now, that may be a declination in health, or it may be that Diana and Marty got a great underwriting decision at the onset. And now there hasn't been necessarily a huge declination in health, but because of that great favor during the underwriting process, there's inherently value in that policy. So we really want to look at policies where maybe there was a great underwriting decision 5, 10, 15, 20, 100 years ago, whenever the policy was issued, and look at it today. There could be a lot more value in it than we think. So that's generally speaking the market, Diana, and that's generally kind of what is qualifying.
Okay, that was very detailed, and I appreciate that. And I really wanted to make sure that you hit that fact that, you know, doing business with Total Financial, and the reason why one of the reasons why we really think we do this well is obviously many of you we've done business with for years and years and years. I have a whole database of every single policy you've written. So if there was an exception or something done on your policies and we knew someone was unhealthy to begin with, we're already ahead of the game. And I have more information to give these guys than anyone you can walk up to the market to that knows nothing about the case. So thank you for bringing that up.
Diana, there's
Yeah.
a great question I think goes really well here from one of our listeners. What about a 20-year term policy that is 17 years in? What's your take on that?
Usually we're looking at convertible term policies. So first and foremost, we do want the policy to be convertible. Various carriers have different options in terms of convertibility. So we have to kind of look at the carrier to decide A, if it's convertible, and then B, where we can convert it. And that's typically the process we'll go through when you do have an opportunity for us to look at.
And if there's an exception to that rule, you should call me because we've been known to have that exception to the rule, which we just did recently. Okay, so let's move on to the second question. You kind of touched on it, but I want to expound on it. How have agents traditionally accessed the settlement market? What are they used to doing that you do different?
Right. So good question. And that's probably important for all of the listeners to really understand. So since the dawn of the industry, the life settlement broker has played a relevant role. And basically what that position has done is it's accessed the market and it's created a bidding environment, which inherently creates more value to the policy, right? If you have one buyer, it's unlikely that that buyer is going to overpay for the policy, right? Where if you have 2, 3 buyers competing, it's likely that the true value will be extracted. So it makes sense that a life settlement broker has been involved in the transaction historically. However, there's been a long cry in the market to find what we call a more efficient model. And while the life settlement broker has played an important role, we believe that that role will be ending very soon, frankly. And the reason is that it's a very lengthy process. And the way that, Scott, if you don't mind putting up slide 1, please. The way traditionally that folks have accessed the market is by going to a life settlement broker, who then in turn will go to, on the left-hand side of the screen, they'll go to a number of providers. Typically, it's 2 to 4. So in this scenario, you'll see 3 providers. Those providers each work with a handful of funding sources. Maybe it's 1, maybe it's 2 funds. So you'll see historically what occurs is the policy owner takes the policy to a life settlement broker. That broker accesses 2, 3, 4 life settlement providers. Those providers then have funding capital sources that they in turn work with. What we've done, and Aaron will be talking a lot more about this in a few minutes, is we've created a way to disintermediate the life settlement broker and give everyone direct access to the actual capital sources that are buying the policy. So obviously what happens is if you disintermediate, there's more available. So immediately advisors and your respective clients will have access to significantly more money than they used to, and it'll flow directly down. So again, traditionally life settlements have these various access points. And, you know, as an example with Coventry, when I worked there, when you go to Coventry, you're going to one source. So you're not having any access to the market. And what we're doing is we're providing, and you'll see how many qualified, vetted capital sources we are bringing to the table. It's a number that nobody in this industry has heard of, and it provides significant opportunities because we can, and you'll see in a few minutes why, but you'll see that we can buy policies that the market otherwise sometimes has no interest in.
Okay. I love the way you started this because it's just going to flow so beautifully into Aaron's presentation. You know, we've typically been dealing with brokers. So, you know, our experience is when we go to a broker and they, like you said, send it out to their, you know, buyers and the people that they go to, they then in turn send it out to other people. And I just want to say, you know, you can muddy up this market real easy. And it's not in anybody's, you know, benefit to be shopping this market, because just like life insurance, the more you shop the market and the more players that are involved, everybody finds out about it, and that's going to dilute and actually make your offers less than it would have if you had picked the correct carriers to go to from the beginning. That's just one little thing I wanted to add. So with that being said, Aaron, why don't you tell us the difference between what LifeRock has and what the traditional?
Yeah, so thank you, Diana. I think there's 4 key points we're going to jump into, but to step back and look at the context of how we were trying to make a better widget for agents and brokers, is we really wanted to create a platform to give agents and BGAs direct access to the life settlement market in a very transparent and cost-efficient manner, while creating a process where we ensure the highest possible offers on policies. So to do this, we've created our Apex platform, aka Audited Policy Exchange, which is different in 4 key ways. First, as Brandon touched on, we've started out with the Apex platform by eliminating your traditional life settlement broker and their associated broker fees from our process, meaning you and your clients can now recapture all of that lost revenue in each transaction. There's just less hands in the pie. Second, we wanted to create an unparalleled level of transparency in the market. And if Scott, if you can bring up slide 2. While loading that, we really wanted to empower both agents and their clients with the tools to really understand what a policy is worth before ever taking a policy to market. And on the left-hand side, you'll see a sample of our policy valuation report. And this is more or less, if you think about it, Zillow for life settlements. We can provide a range, a very accurate range of what we think a policy is worth, utilizing our valuation modeling tools, and as an output, providing you as an agent with the valuation report.
And Aaron, this is done right away, right?
We can do this at several points in the process. We can do this up front when it's, hey, I have a guy, and you have a few lines of underwriting information paired with an illustration. And then we like to update this once we've built the file and we have life expectancies in hand before we go to market. So agents can have a meaningful conversation with their clients around what we might expect to see in the auction process once we kick that off.
Great.
Yeah.
And can we give this out? I mean, it's kind of hard. I know we're viewing this on this format, but if anybody needs to see an example of this, we can certainly provide it to you at later time.
Yeah, be happy to provide that. So secondly, on the transparency side, we wanted to provide full transparency into the auction process for agents and their clients. So we developed what we call our audited bid history. And for every policy that we bring to market on the Apex platform that goes to auction, we will provide total, and you as the agent at the end of the process, a certified, internally audited auction summary for every case, summarizing every bid, counter bid, funder indication, and funder declination for our auction process. So you have full transparency into the auction. The third thing that makes Apex very different is, as many of the people on the call know, a policy tends to be worth more as an insured's life expectancy is assessed to be shorter. Yet today, there are 6 commonly used life expectancy vendors in the market. So for an agent, choosing the right life expectancy or life expectancies to order for a case becomes a very risky and complicated task, and that you might order the wrong life expectancy on a case. To help solve this problem, we built a system to help predict what an insured's life expectancy is going to be with each of those 6 commonly accepted vendors in the market prior to ever actually ordering a life expectancy. And we've paired this process with Diana's and Total Financial's internal underwriting expertise to help ensure that we're ordering the right LE on every case to maximize policy value. Fourth and lastly, we give you as the agent and your clients direct access to 85 plus global capital sources who competitively bid on our policies on the Apex platform. And this covers every major buyer that you may or may not have heard of in the past, and many more. So with these 4 components, the Apex platform has really proven to be a revolutionary thing in the life settlement space. And as a result, Apex is the fastest growing life settlement platform in the market. Agents and clients can now access valuation tools, the global life settlement market directly, and an auction platform that creates the bidding that we need to ensure the highest possible offers on every case without paying a broker.
And this is a computer-generated platform. You have 2 things going on. You have not only people in-house that internally review your cases and can come up with the LE, but you actually have a computer where you put information in and it spits out what it believes to be the LE, yes, the combination of based on what I'm providing for you from an underwriting standpoint, right?
Correct. So algorithmically, we are predicting what life expectancies will look like. A human reviews that along with Diana, and we make an educated determination on what life expectancies we will then order for a case prior to going to market.
Why don't you give an example, Aaron, of what happens? both economically and in the market if, for example, you order the wrong life expectancy.
Yeah, so I think a case example that comes to mind was a gentleman's late 70s, and we had seen a life expectancy from an agent that had ordered one himself and sent the case in for our review. And that life expectancy came back at 72 months. So you're right on the dot at 6 years. It was $1 million policy. And at 6 years, the policy was worth $300,000 to $400,000. After we did our internal review, we determined that a second life expectancy from a vendor that you would not traditionally think of would come back with a shorter life expectancy, significantly shorter. We subsequently ordered that life expectancy, which came back at 41 months. And the value of that policy, if we had just had the one life expectancy at 41 months, would have been about $650,000 versus the $300,000 to $400,000 that the policy was worth based on the LE that the agent had ordered.
That's a big difference.
Almost double.
That's a big difference. And you know, in the past, we've been so used to basically like trying to pick like the top two. And even if you pick the top two, you know, you get an average of the two. But being able to have this program that really just pinpoints it and lines it up and gives you the best possibility is going to give us the best offer right out the door.
Yeah, we call it LE roulette.
Okay, I like that. Okay, so that's a little bit about the background of the Apex. Brandon, why not also, even though you kind of touched on it in the beginning of your intro, let's talk about niches. You mentioned like, you know, some policies or products that you're basically interested in, but what are some other niches that LifeRock has and specializes in?
So the best part about what we've put together is that Apex is the market. So if somebody's out there actively buying any type of respective risk, we're going to capitalize on it. And as a result, we do have a number of very unique sources of capital that look for unique types of risks. So we see a lot of longer life expectancies. The market generally stays away from these. It's not the easiest type of case when it's a long life expectancy, but a lot of times we do have sources that have appetite for these 200 plus month life expectancies. Jumbo cases. We have a number of folks that like to move a lot of money in this market, but don't like to buy small policies. So policies 10 million of death benefit and more. We have a number of very interested buyers. We're doing a lot of retained death benefit cases still. This has been around for decades now, but continues to help solve a lot of problems where the insured needs some insurance, but for whatever reason doesn't want to pay for it, can't afford it, would rather allocate that money to some other investment. So we're able to take a policy and assign as an irrevocable beneficiary a portion of the death benefit and eliminate all of the premium obligation. And then the advisor would make some commission in the process as well. We also are, I mentioned a little bit before about term, but term is an enormous opportunity. So anytime there's a term policy, even if the insured is healthy and they're letting it go, as long as the target is a decent size, we should absolutely take a look at that. We're buying more GUL policies than ever in the past. We buy a number of variable policies. We're SEC compliant to be able to transact any type of a variable policy. And we also are seeing, you mentioned earlier, Diana, that the number of transactions are increasing. Well, over 2,000 more transactions in the coming years is a significant number. So these transactions are going to happen, and we just want to make sure everybody is aware to kind of be able to spot them when they do.
Great. I'm going to help you do that. I mean, actually, we've kind of already done that already. We've been spending the last few months, this is actually good because of COVID that we've had time to do this. But we've actually looked into like our database in general, all the policies that we've written, and pinpointed through different agents which policies just from the product and just from their ages would be appetizing to some of your buyers, which of course you'll add that to before. But what I want you to talk about, because everybody on this call wants to know, is what can they do to prospect for business, and what can they do in their book of business to generate new opportunities?
Great question. That's clearly why we're here. So red flags are what I mentioned, term policies that are about to lapse. Another red flag is if a client complains, can't afford the premium. Every time they get that premium notice, they call you and say, is there anything I can do? Let us take a look at it. Maybe we can appraise the policy. And that's an important word, appraise. We highly recommend when advisors are communicating with their clients to suggest that we have the policy appraised, we have it valued, we find out what it's worth. We do not recommend that you tell anyone to sell their policy. It's never effective. And frankly, seniors never like to be told what to do, especially to sell an asset. But everybody always wants to find out what their policy is worth. So we highly recommend that type of a language when you're communicating with your clients. They typically know what their house is worth, what their second house, their fine art, etc. But do they know what their policy is worth? And that's a great question for you to ask them that they probably don't know the answer to, and they probably would be very happy to find out if it were worth more. Beauty of the process is they don't have to do much. Besides signing a simple HIPAA release, that's it. We do the rest of the work. There's no blood, there's no paramed, there's no exam. We literally can tell them what the policy is worth after a single signature. So it's a very effective prospecting tool for advisors. Also keep in mind situations where the insurance is no longer needed. Maybe there's a divorce situation, maybe there was a business situation. In the last 6 months, I've seen a number of businesses that closed that had some key man policies. They were no longer needed, and they were literally going to let those policies drop. Those are definitely red flag situations. Maybe somebody bought insurance for a great reason, and it's just not needed anymore. Maybe they don't need as much. Maybe their children went on to become successful, and the original policy is not as appropriate as it was when they bought it 8, 10, 20 years ago. So maybe even an insured has heard about COI increases, and they're worried about the future of their policy. So those are just some probing types of questions that we recommend advisors are constantly asking. The other thing is an annual appraisal. We are glad to help you, and on an annual basis, let's find out what that policy is worth. Maybe you need it, maybe you should keep it, maybe it makes all the sense in the world. We would never suggest getting rid of insurance that's needed. But think about all the times and all the scenarios where it's not needed anymore, or something else has changed. We, in fact, have a very unique program as well called split policy, where even if the carrier might not allow you to change the death benefit, we might be able to help you. So there's all kinds of ways that, as Diana mentioned at the beginning, that life settlements can be used to solve problems. And we really recommend you use that appraisal tool to help you in your prospecting.
There's so many good things that you just talked about. I really, really love the business one. You so nailed that one on the head, because there are so many businesses that unfortunately and sadly are going out of business. And they did have policies on key men and buy sells and such and such. And what a great time if they're going out of business to be able to say, hey, but you had a policy. Let's take a look at that and see if there's any value. I mean, and that's got to be at least 10 people off the top of my head that I could hit on that. There's something else I want to talk to you about, which Aaron wasn't prepared for, but I'm going to bring it up anyway. I just have a habit of doing that. So we've talked about Apex, and Apex is a really, really unique platform. And it's one of the main reasons why you chose Total and we're partnering with you. But you and I have worked on some cases where we haven't even gotten APSs on a case, where I've actually given you the information regarding the product that you needed, and you've actually gotten on the phone and had a conversation, and or just said, we need a couple questions answered about this. So that's not the Apex program, but do you want to just talk about how, because that really is something that's very unique and defines a difference between you and other people, because everyone doesn't want to be bogged down with 6 months of APSs, even though I could do it in less now. But just talk about that, because sometimes it's a shorter time.
Yeah, really, we created a solution which we call Policy Fast Cash, which is really an internal underwriting process, no med internally, to solve the problem where when we get a call that we need to table an offer almost immediately. And we don't have time to go through the traditional underwriting, file building process and auction process that normally would be afforded to us with Apex. So with Policy Fast Cash, very similar to what you would maybe see in the drop ticket market on the life insurance side, we gather a little bit of information that looks similar to a Part 2 as part of our application, and then we do a phone interview with the insured. And then very similar to a drop ticket or a quick ticket with a life insurance carrier, we can ping a number of databases to get pharmacological data, medical claims data, all that good stuff. And we can underwrite internally and produce an assessment within 24 hours if need be. Generally similar to these life processes, time does not always equal the best possible offer. So Policy Fast Cash is not our solution per se for the highest possible offer. That would be Apex. But if we are in a situation where we need an offer and we can live with a good offer, maybe not the best offer, Fast Cash could be an option for us.
Okay, I really had to hit that because there was an instance, and I'm reading questions as they come up, and people are saying, well, you know, what's like the minimum face amount we can do, or, you know, what can we do on healthy people? And I don't want this to be focused on we're really here to sell healthy policies, because we're really not. We would really like to do this for people who are, you know, unhealthy, become unhealthy, or are in a financial jam right now. But they are asking me, is there a minimum face amount? Because I know we just did one for really, really low, but do you have a minimum you want to tell people?
I'll kind of walk through, I think, 3 buckets. There was maybe 3 questions, which I'll hit the healthy insureds first. So if it's a healthy convertible term policy, we're generally looking for ages 63 plus. And face amounts $2.5 million and larger, though we can go smaller on a case-by-case basis. If it's a traditional universal life policy and the individual's very healthy, we typically are looking 70 and over. Though we transacted a policy on the Apex platform last year for a $50 million policy on a perfectly healthy 65-year-old. And that was from a product from a carrier that was mispriced at the time of issue. And we were able to identify the product as being mispriced, therefore a good investment opportunity for one of our funds. So we certainly have these general guidelines, but if it's a reasonable case, we always would like the opportunity to review to see if there's something that may fit outside the traditional box.
That's perfect. To add to that, what do you want to do about foreign nationals? I haven't ever actually had to ask you that before.
I was just going to ask that question.
Foreign nationals, case by case. So first and foremost, the policy is going to need to be from a U.S. domiciled carrier issued on U.S. paper. So that's number one. And then it'll be case by case, depending on where the insured is and how easy we think the trackability of that insured will be in a third-party country, so to speak. So we have transacted policies on individuals in Switzerland or Israel on a case-by-case basis. Some places where things maybe get more complicated is in places in Canada. There are provinces in Canada where life settlements are actually outlawed. So please surface the opportunity to Diana, and we'll review it and advise if we think that there is a scenario that we can proceed.
Okay, I think my most important part of this is if we were agreeing to do this, would all the paperwork and everything that we're doing, the closing docs and everything, are those all signed in the U.S. or do you on occasion have the ability to sign it outside the U.S. or
on occasion we can sign in a U.S. embassy outside the U.S.
Okay, good. Okay, I'm going to stop interrupting and answering with questions, but I'm so excited that people are actually sending over questions because I know that there's more to come. But look, there is a huge marketing opportunity. Like I said, we've already, Brandon and Aaron and I have already done a deep dive into our book of business and kind of gone through carriers' books and agents' books, have the opportunity to give people those books, but not every agent knows how to client and have this conversation. So, Brandon, what kind of marketing materials do you have that can assist these guys with just going after this business?
Right. Well, there's a number of ways that I can help with outreach and identifying opportunities. First of all, it's obviously knowing what to look for. So hopefully today we kind of outlined who we're looking for, who we're not looking for. 40-year-old that just ran a marathon is not a life settlement candidate in any circumstance, right? But generally speaking, people over that 70 are. Then it's really a function of kind of diving into your business and analyzing opportunities where insurance is no longer needed or liquidity could be more valuable today. Again, I mentioned earlier, if there was a great underwriting decision that Diana or Marty was able to secure for you, that in and of itself is a great opportunity to look at. So in addition, we have a lot of marketing material for you. So we have PDFs on retained death benefit, on term policies, on just typical life settlement transactions. So with Diana, we'll start getting all those to you to see. Other ways that I can help you, though, is we have sales folks throughout the country, and we could help with presentations. We could do things like we're doing today with centers of influence that you work with, maybe business managers, maybe it's a CPA firm, maybe it's an estate planning firm. So we do presentations all the time with random and different types of fiduciaries. That's one way we can help. Pre-COVID, we were doing things like lunch and learns and bringing in breakfast to your office and educating other agents that maybe you're working with, etc. Obviously, now we can do those kinds of things on the phone to help you. But at the end of the day, in addition to the marketing pieces that we're going to circulate to you, use us as a resource. If you have a case, please reach out to Total or ask them to reach out to me, and we'll tell you real quickly if we think that a case is viable. The last thing we're going to do is waste people's time. If the case makes a lot of sense, we're going to help you in every way we can. But more importantly, if it doesn't, we will not spin anybody's wheels. So those are some of the ways that we can help from a marketing perspective.
Okay, and for some of the agents that I've already spoken to and that we've already been working with and done this for, you have beautifully helped design letters that they have been able to send out to their clients.
Right.
And here's the key, that I think is really important. We're not asking you to walk into any client and say, hey, are you interested in selling your policy? Because that's not good for business. That's not what any of us really are here to do. This is really a time for a policy evaluation. So we're not just talking about, selling policies, because if you're offering your client and doing your due diligence and actually offering a policy review, there's other opportunities that can happen, like you discussed in the beginning, whether it's getting new insurance, for that person, or reevaluating what they already have. And a lot of these people have policies that they purchased with certain companies where the COIs might have just like doubled or tripled and client can't afford it. So Brandon has been great in helping draft letters for those people who might not necessarily want to pick up the phone and call people. So that's another marketing source that we have.
Yeah, just real quickly on that, Diana, we not only can help with letters to clients that you currently have, and we've generated a number that Diana can help with, but we've also identified some scenarios where maybe you inherited a book, or maybe they were orphan policies, or maybe some other scenario where you want to do some outreach. So we've already prepared letters for that as well. And finally, we've done an exercise with even some advisors on this call today, where we've gone through, looked at books of business and really helped identify a pathway to where the more valuable policies are. We'll look at vintage of carrier, we'll look at year, we'll look at a lot of factors, age of insured, et cetera. So if you have your own data that would be helpful for us to kind of look through and kind of point you on the right path so that you're not wasting time, there's absolutely other ways that we can help identify business for you and then use some of the resources already prepared to go out and do the marketing.
That's great.
Guys, I got a couple of basic questions that I'd love to ask, and they're coming from the audience. Number one is, talk about the licensures that's needed for this, and the second part of that is, what if you have a variable policy? Does the agent still need to be securities licensed, or how does that work?
Yeah, so on the licensing side, many states require licensing for an agent to receive commission directly. Kind of whoever LifeRock is paying as the agent of record, or the client representative, would need to be licensed. Total and Diana have made many of those agent and brokers licenses around the country. And when it comes to sort of appointment process with us, we do run an appointment process and a background check, et cetera, similar to what carriers would do. And you would become an appointed agent under Total Financial with LifeRock for the Apex platform.
Okay, let me add to that, because this is really important, and this is just how we've been doing it. So getting your life settlement license is very easy. If you have your life license and you want to go and start doing transactions with life settlements, you go to the Department of Insurance and you tell them you want to add a life settlement onto your license. Most of the time that actually gets done quite quickly, because you've already completed your CE courses that are required for the life courses, and you don't have to do any additional CE credits for it. I have always recommended, in the time that we have been doing these transactions, that if an agent's going to get paid, you should be licensed. I don't ever want to put anybody in a position that you're getting money and you're not licensed. That's just not correct. So answer is, should get licensed, and it's very, very, very easy.
Yep. So for variable policies, our SEC platform that Brandon referenced is really a platform that allows us as a provider and our funds that are on our Apex platform to buy policies in a compliant fashion in the eyes of SEC. If an agent on the sell side of the transaction is looking to receive compensation, they would need to be registered with a broker-dealer. So there are just many buyers and providers in the market that are not able to transact, period. We have a platform that makes sure we're compliant, and will require that you're registered with a BD if compensation is going to be paid on a variable policy.
Great.
Speaking of commission, Diana, do you want to talk about, or maybe I could mention just kind of how it's eligible, and then
Typical.
We've talked a little bit about that. Yeah, typically people are
Typically, I think you should talk.
I'll tell you what what you're allowed to do, and then what kind of typically what we see. So typical commission eligibility on a life settlement is up to 30% of the offer, more often than not. We don't necessarily see the full amount being taken, but historically, remember, you'd be sharing that with someone else. So now all of that's coming back to kind of the family there. So however you choose to take the compensation, it's not really up to us. It's entirely up to you. And how you want to share that with your client is also entirely up to you. The benefit of using Apex is we're going to extract the highest offer, and you're going to have the most money to work with. One other thing I did want to mention about Apex is the channel is an exclusive channel. So if a policy does enter onto the Apex platform, we're all agreeing that that is the only place that the market will see that policy. And we touched upon that a bit earlier with an example of an advisor going out and getting his own life expectancy. Well, as an example, if that life expectancy was significantly worse than the life expectancy that we obtained through our proprietary technology to select the correct LE, we then have a scenario where that policy is now worth nothing in the market. We cannot take that chance. So we do everything we can to extract maximum value for the policy, and we ask in return for exclusivity on the marketing of that policy.
Yeah, with the caveat that at the end of the Apex process, if the client and agent are not happy with the outcome, we will automatically release any exclusivity. There's no penalty for breaking at that point. We'll hand you back the file and you can take it elsewhere.
Thank you. That's really important that you said that. So I just want to make sure that everybody's clear. This, again, is a proprietary platform. It's being given to Total Financial. There's not, like, you're not going to find this down the street. Okay. This is here. So you will be asked to sign an NDA on this that says you're exclusively giving this to us to shop, and you're not going to use us and shop against us and ruin what we possibly could get for you. And then if it's not acceptable and you don't think that the offer is right, we'll be more than happy to release you and make sure that you have the information to go elsewhere.
Right. And Apex is not available to the general public. We've carefully selected and vetted Diana and Total, and couldn't be happier with the partnership, of course. So we're looking forward to doing a lot of business together. I do see some more questions. If we have a couple minutes, do you want to try and get to those, Scott?
Yeah, let me, I think I've kind of asked through most of these. Let me take a quick peek. Just a reminder.
Question I could address real quickly. Generally, the taxing of the policy should be done with
that one.
If your CPA. We don't offer tax advice. We are not tax consultants. But generally speaking, it's pretty widely accepted that anything up to basis is tax-free, and over it is ordinary income.
Capital gains.
I'm sorry, capital gains.
Okay.
And above, yeah.
Yeah,
So,
basis generally being considered premiums paid.
Where are you guys? So we can share samples of your marketing and your letters with our folks, right?
Absolutely. We'll get you all that.
Okay. Honestly, I will tell you the best way to access Brandon, Aaron, and their team, come through Total. I will tell you, Diana and I truly, truly believe in this marketplace. And we've actually aimed one of our better resources at this marketplace, because we truly believe that this growth opportunity. So if you have questions and you want to get access to Brandon or Aaron, call Seth Moses. You can email Seth at smoses@totalfinancial.com. His extension is 243. I'm sure lots of people on this phone know Seth. You've dealt with him before. He is the best. We love Seth. As soon as you give him something, he's such a bulldog. He gets it done. But he is going to be the main contact as we go through the settlement marketplace and start growing. So again, smoses@totalfinancial.com. Our phone number, if you don't have it, is 800-989-7500, and his extension is 243. Just remind you again, it's 243. So you guys are willing to get on the phone, do Zoom calls. What is it? I think you answered it, but I do want to double check. Would you meet with an attorney or an advisor?
All the time.
I think that's an important piece of the puzzle, because a lot of times attorneys get involved, and they ask a lot of questions.
They're also often the time that the insured or the policy owner might reach out to them as a question. So educating them can only help the advisor.
Yeah. Hey guys, are there any states that you don't play in?
For most of the big ones currently, we are in the process of completing kind of our national rollout. I'd say like one notable exception is we're pending in New York, and that Apex will be approved there, I would imagine, by the end of the year. But we are in most of the big states: California, Florida, Texas, Illinois, etc.
Let us know as soon as that New York one becomes available. I know there's some people on this call that will probably be very interested in that one.
Yep.
Matter of fact, yes, there is. I think you guys got to this one already, but I want to just make sure that you made me hit it home a little bit. Is there a max limit and then a low amount that they shouldn't even bother with? Face amounts.
Generally for Apex, 250 and larger. You get much below 250. What we generally find is it's not worth the agent's time to transact, the buyer's time to transact. It just becomes a little difficult. There is no theoretical limit. We've looked at policies 50 million, 100 million per life. They definitely become a little more complex as you get bigger, in the same way that you might have to source something facultatively on a jumbo policy when you're originating it at time of sale. Similar to when you sell off, we kind of have to put together a package of investors to take down $100 million risk, but we've done it. We've seen it before. It's not a limit.
Perfect. Well, if there isn't any questions, we're at the top of the hour right now. A couple of things I want to say. Super excited that we have partnered with LifeRock and Aaron and Brandon. You three of you did a fantastic job on this video town hall chat that we had today. We do believe this is going to be an incredible growth opportunity for us, for our agents. We're putting resources behind it. We're partnering with the right team. Their process at LifeRock is so unique and it's efficient. It's one of the best that is out there, and we are one of the proprietary firms that has it. And I think that's really important to know, especially when you're starting to take that middleman out of the game and giving the tools to us and to our agents. I think that's an important piece of the puzzle. So with that, I want to go back to, we're here to support you. We have internal support now with your sales VP. You have internal support now with Seth Moses. Again, it's smoses@totalfinancial.com. His extension is 243. Work through him. They'll get you access to Aaron and Brandon. And with that, love to hear from you. I know we got a couple of people in the chat already said they wanted to talk with us. So that is awesome. I'm excited. If you have any questions, please give us a call and we will chat soon. Have a great day, everyone.
Thank you.
Thank you, everyone.
Thank you so much, guys.
You being on.
Thank you for
Thanks,
having
guys.
us.
Thanks.
Yeah. Bye.